All right, strap in, everyone. Today, we are taking a deep dive into Santech Holdings. You guys have sent us a ton of research reports, news articles, analyst opinions, the whole nine yards.
Yeah, it seems like there's a lot of interest in this company, and for good reason. I mean, you don't see this kind of transformation every day.
That for sure.
Yeah.
I mean, just to recap, for anyone who might not be familiar, Santech is a company that's undergoing a pretty dramatic shift right now. They were traditionally known for financial services and health management. They had this whole focus on high net worth individuals in China. But now they're pivoting hard into new retail social e-commerce and get this, the metaverse.
Yeah, it's a pretty bold move. They're basically trying to reinvent themselves and catch the next big wave of tech innovation.
But they've also hit some pretty major roadblocks along the way.
Oh, yeah, we can't forget about those NASDAQ compliance issues.
And then there's the whole situation with their former CEO getting detained by Chinese authorities.
Yeah, that definitely threw a wrench in the works.
So the big question is this metaverse move a stroke of genius or a reckless gamble? I guess that's what we're here to figure out.
Exactly. By the end of this deep dive, you should have a much clearer picture of what Santech is all about. What are the risks involved? And could this gamble actually pay off?
Right. So let's start with the basics. What exactly does this metaverse pivot entail? How do they plan to make money in this virtual world?
Well, to be honest, their specific business model and revenue streams are still a little bit hazy.
Lizzie, huh?
Yeah. They talk a lot about leveraging their existing customer base, from their financial services days. But how that translates to selling virtual goods or experiences is anyone's guess. I mean, are we talking about virtual real estate, digital fashion, NFTs? Who knows?
We have a lot of unknowns there.
Definitely.
But let's zoom out for a second and look at the bigger picture.
Mm.
Is the metaverse really the gold rush that everyone seems to be making it out to be? I mean, we hear so much hype about it, but is there real substance behind it?
Well, if you look at the projections, it's hard to ignore the potential. The metaverse market is expected to explode, growing at a compound annual growth rate of 35.6% between 2025 and 2032. That's massive.
35.6%, that's huge. What's driving that kind of growth?
A few things, actually. First, you've got the rise of 5G, which is going to make these immersive experiences much smoother and more accessible. Then you have the boom in social commerce. People are increasingly comfortable buying and selling things online and interacting in virtual spaces. And let's not forget, we're all glued to our mobile devices these days. The metaverse taps into that trend as well.
So it sounds like there's real momentum behind this, but every new technology comes with its own set of risks. What are some of the potential pitfalls of the metaverse that investors should be aware of?
Well, data privacy is a huge concern. Think about all the personal information that could be floating around in the metaverse. It's a potential gold mine for hackers.
That's a scary thought.
Yeah. And then you've got the regulatory landscape, which is still very much a work in progress. Governments worldwide are trying to figure out how to regulate this virtual frontier, and that uncertainty can be a big risk for businesses.
So a booming market, but with some serious risks. Where does Santech fit into all of this? Do they have what it takes to compete in this space?
Well, that's where things get a little bit tricky. Their competitive advantage in the metaverse is still a question mark.
A question mark.
Yeah, they've got experience with consumers, sure, but the metaverse is a whole different ballgame. They'll need to develop some serious tech capabilities and figure out what makes them stand out from the crowd.
Right, because they're going up against some pretty big players who are already well established in the tech world.
Exactly. And that brings us to, I think, the elephant in the room, the detention of their former CEO.
Yeah, we can't just gloss over that. What happened there? Fill us in.
So back in September of 2024, both the chairman and CEO were detained by authorities in Shanghai. This was for alleged illegal activities related to their previous business, Highwind Wealth Management.
So not exactly a vote of confidence. How does the company reacted to this whole situation? What are they doing to try and reassure investors?
Well, they've appointed Lawrence Waylock as the acting CEO. He comes from an investment banking background, which, could be valuable as they navigate this turbulent period.
Okay, so they've got new leadership in place, but what about the investigation? Is there any news on that front?
Unfortunately, the investigation is still ongoing, and that's the problem. That uncertainty is a major concern for investors.
Because it raises all sorts of questions about Santech's corporate governance, their transparency.
Exactly. And then they also announced a share repurchase program.
Right. What's the thinking behind that? Are they just trying to appease investors?
It could be seen as a way to try and boost investor confidence. They're basically saying, hey, we believe in the company's future and we're putting our money where our mouth is. But actions speak louder than words. Investors want to see tangible results.
Tangible results.
Yeah.
So let's get into the nitty-gritty. What does the financial picture look like for Santech?
Well, let's just say it's not a pretty picture. They're facing declining revenue, reporting net losses, and their operating margins are in the red. As of February 21st, 2025, their market cap is just $18.21 million, and their price-to-earnings ratio is negative.
Oof, those are some tough numbers. Is there anything in their financials that could be a reason for optimism?
Well, one interesting point is their high gross profit margin. It's a whopping 94.41%. That suggests that if they can get their operating costs under control, they could be incredibly profitable.
So potential for profitability, but they're struggling with execution.
Yeah, it's kind of a classic startup story, just on a much larger scale,
Yeah.
with higher stakes.
Absolutely. But then there's another wrinkle. They're also grappling with these ongoing compliance issues with NASDAQ.
Right. Back in November, they received what's called a deficiency letter for failing to file their annual report on time.
Okay, so what does that actually mean? The deficiency letter sounds serious. Could they potentially get kicked off the exchange?
It's a real possibility. I mean, they did receive an extension, but if they don't address these issues, delisting is a real threat.
And that would be bad news for obvious reasons.
Oh, absolutely. It would make it harder to raise capital, hurt their credibility, and probably send their stock price plummeting.
Okay. So let me just recap here for a second. We've got a company with, let's say, an evolving business model, venturing into a booming but risky market. They're facing some financial difficulties and struggling with regulatory compliance.
And all of this is happening against the backdrop of leadership uncertainty and potential reputational damage from their former CEO's detention. It's a lot to process.
It is a lot, but that's why we're here. To break it all down so our listeners can decide for themselves if Santech is worth the risk. And to help with that, let's talk about market sentiment. What are investors saying about Santech? Are they running for the hills, or is there still some faith in this metaverse play?
Well, that's where things get really interesting. Well, it's a real mixed bag, to be honest. The share price has been on a roller coaster ride lately, which is understandable with all this news swirling around.
Makes sense. So some investors are clearly spooked, but there must be some people out there who still believe in the company, right? I mean, why else would they even be listed on NASDAQ at this point?
Oh, absolutely. There are definitely some positive signals out there. The average one-year price target for Santech is $12.24.
Wow, $12.24.
Yeah, that's right. Which indicates that some analysts think it could really bounce back, significantly. And they've actually received a strong buy rating from certain corners of the market.
A strong buy rating, huh? It's like a classic high-risk, high-reward situation.
Exactly. Like they say, no risk, no reward.
Right. Well, some people have a higher tolerance for risk than others. So before we get too caught up in this whole metaverse hype, let's take a step back and look at who's really calling the shots at Santech. What can you tell us about their ownership structure?
Okay, so ownership structure. One thing that jumps out right away is the high concentration of insider ownership. Insiders control a whopping 84.6% of the company's shares.
Whoa, 84.6%. That's a lot of control in the hands of a small group of people. So is that a good thing or a bad thing? I mean, it's got to have some implications.
It does. It's a bit of a double-edged sword. For some investors, it's a red flag. It raises concerns about potential conflicts of interest.
Like, are decisions being made in the best interest of all shareholders or just those insiders?
Exactly. And then on the flip side, you could argue that it shows those insiders have skin in the game, like they're committed to the company's success.
I guess it makes sense. They stand to lose a lot if things go south.
Right. But it's really important to also look at the other side of the coin. Institutional ownership is super low, only 0.372%. That suggests that those big institutional investors are hesitant, maybe because of the lack of transparency.
The lack of transparency, or maybe those uncertainties surrounding this whole transition.
Could be a combination of factors, but it definitely raises some questions. So here's the situation. We've got a company facing these financial headwinds, regulatory scrutiny, and there are questions about their leadership, ownership structure, and mixed market sentiment. It's a lot to digest.
It is a lot.
Yeah.
Okay, so let's do a reality check here. What are the biggest risks and opportunities for Santech at this point?
All right. Well, a good way to break it down is to do a classic SWOT analysis.
A SWOT analysis. Love it.
So that's strengths, weaknesses, opportunities, and threats. It helps paint a clearer picture. So starting with strengths, They have that existing customer base from their previous business, they've got some experience in consumer-facing services, and they have a really high gross profit margin, which is definitely noteworthy.
Okay, so they've got a decent foundation to build on. But what about their weaknesses? We've already touched on a few, but let's dive in a little deeper.
Sure. I think their biggest weakness right now is that their competitive advantage in the metaverse is still unclear. It's hard to get investors excited when they don't really understand what the company's doing.
Right. And then there are the financial struggles, declining revenue, net losses, negative operating margins. Those are not things that get investors excited, to say the least.
Yeah, it's one thing to have a high gross profit margin, but it's meaningless if they can't convert that into actual bottom line profitability.
It's like, having a Ferrari with no gas. You can look at it, but you can't go anywhere.
Exactly. And those ongoing compliance issues with NASDAQ are definitely a weakness. The risk of being delisted is a huge threat, and it's hard to overstate how damaging that would be to their credibility.
Yeah, that's a tough one. And of course, there's the issue of high insider ownership, which can be a strength and a weakness, as we discussed.
For sure. On the one hand, it could mean insiders are committed, but it can also raise concerns about conflicts of interest.
Okay, so that's a pretty comprehensive list of weaknesses. An unclear metaverse strategy, financial struggles, compliance issues, and that high insider ownership issue. So let's switch gears and talk about opportunities. Despite all of these challenges, what are some of the potential bright spots for Santech?
Well, the biggest opportunity lies in the metaverse market itself. It's this huge, rapidly growing market with massive potential. If Santech can figure out how to position themselves and develop a compelling product or service, the rewards could be enormous.
Yeah, they're betting on the metaverse for a reason. It's a potentially game-changing market.
Exactly. And one thing they have going for them is their existing customer base. They could leverage those relationships to gain a foothold in the metaverse.
Right. They've already got experience serving a pretty high-end clientele. So if they can translate that to the metaverse, they might have a head start. What else?
Strategic partnerships and acquisitions could also be key. By partnering with those established players in tech or gaming, they could gain access to expertise and resources that could really help them scale their metaverse operations much faster.
Smart move. And acquisitions could help them get their hands on technologies or talent that would otherwise take years to develop in-house. So tapping into that customer base, forming partnerships, making acquisitions, those are all potential paths to growth in this new market. But let's not forget about the other side of the equation. What are some of the threats that could derail Santech's metaverse ambitions?
Well, the competition in the metaverse is fierce, and it's going to get even more intense. They're going up against giants with tons of resources, and they're going to need to find a way to stand out and differentiate themselves.
So fierce competition, that's definitely a big one. What else should investors be worried about?
The technological landscape is constantly shifting, so Santech is going to need to stay ahead of the curve. If they fall behind technologically, their offerings could quickly become obsolete.
Yeah, it's a fast-paced world out there. They need to be agile and adaptable to survive.
Exactly. And we can't forget about regulations. Governments all over the world are still figuring out how to regulate the metaverse. Any new regulations could create significant hurdles.
It's like the Wild West out there in the metaverse.
Yeah.
Okay, so we've got competition, technological challenges, and regulatory uncertainty as major threats. Anything else?
I think that lingering reputational damage from the former CEO's detention is a real threat. It could scare away investors, partners, and talent. Rebuilding trust is going to be essential for Santech moving forward.
So they've got a lot of potential pitfalls to avoid.
Right.
It sounds like they need to outmaneuver their competition, stay ahead of the technology curve, adapt to new regulations, and rebuild their reputation. It's a lot.
It is. It all boils down to execution. Can they leverage their strengths, address their weaknesses, capitalize on those opportunities, and mitigate the threats?
It's a high-stakes game, that's for sure. All right, so we've covered a lot of ground here. What's the big takeaway? Is Santech a sinking ship, or is there still hope for this metaverse miracle?
It really is a tough one to call. I mean, you look at the metaverse and the potential is just enormous. And Santech does have some things going for it. They've got that existing customer base. They've got experience dealing with consumers. And then there's that high gross profit margin that really jumps out at you. But on the other hand, You can't ignore those financial problems and those compliance issues, and then the leadership question marks. It's a real mixed bag.
It really is. And I think that's what makes this whole situation so fascinating. It's not a clear-cut case.
Yeah.
There are strong arguments to be made on both sides.
Exactly. And that's why it's so crucial to, really peel back the layers here. Like with that gross profit margin, yeah, it's impressive, but what's driving it? Is it sustainable? Or is it just, a temporary thing? To answer that, we need to understand their business model, which, as we've said, is still kind of a mystery.
Right, that's the big missing piece of the puzzle. And it makes you wonder, what would it actually take for Santech to make this work? What would they have to do to convince skeptical investors like me that this isn't just another company, jumping on the metaverse bandwagon?
Well, that's the million-dollar question, isn't it? What would it take to turn those skeptics into believers? Would it be a rock-solid plan that lays out exactly how they're going to make money in the metaverse? Maybe a detailed roadmap with clear milestones and targets?
Maybe? Or would it be a resolution to those NASDAQ compliance issues? Something to show that they're serious about cleaning up their act and improving their corporate governance.
Could be. Or maybe it's about leadership. Would investors feel more confident if they saw a more transparent and communicative leadership team, a team that's willing to acknowledge the challenges and address those concerns head on? I think that could go a long way.
Yeah, I think you're right. Transparency and communication are key, especially when you're dealing with a company that's going through this kind of transformation and facing this much uncertainty. And it's a good reminder for all of us, right? When you're investing in these emerging technologies, particularly something is new and, let's face it, unproven as the metaverse, you need to be extra cautious.
Oh, absolutely. Don't get caught up in the hype. Look at the facts, analyze the risks, and ask the tough questions. And remember, it's perfectly fine to sit on the sidelines and wait for more clarity before jumping in.
Well said. So to our listeners, we want to hear from you. Do you think Santech has what it takes to succeed in the metaverse? Head over to the comments and let us know your thoughts. We're always up for a good debate. And while you're at it, tell us about your top metaverse stock picks. We'd love to hear what you're excited about.
And for those of you who are looking to learn more about investing in emerging tech companies, especially those that are making bold moves into the metaverse, we highly recommend checking out the Stock Analytics AI YouTube channel.
They've got some fantastic videos that break down these complex topics in a really clear and easy to understand way. Seriously, go subscribe. You won't regret it.
Absolutely. And as always, a friendly reminder that this deep dive was based on publicly available information, and we are not providing financial advice here.
That's right. Always do your own research, talk to a qualified financial advisor if you need to, and make sure you're comfortable with the risks before making any investment decisions.
Well said. Investing always involves risks, and what works for one person might not work for another. So it's all about finding the right investments for your own individual circumstances and risk tolerance.
That's great advice. Thanks for joining us for this deep dive into Santech Holdings. They're a company with a lot of potential, but also facing some real challenges. The metaverse is such a fascinating and rapidly evolving space, and we'll definitely be keeping a close eye on Santech to see how they navigate this new frontier. We'll be back next time with another deep dive into a company making waves in the market. Until then, happy investing, everyone.